What's up investors, and welcome back to the channel. Today I want to talk about Cielo Waste Management Corp. This stock is traded on the Canadian Securities Exchange under the ticker CMC and on the OTCQB under CWSFF. This is a stock that has made incredible gains through February and early March before dropping and consolidating nicely until a recent short seller report caused the stock to drop another 10%. I think this has provided investors with a good chance to invest, so stick around and let me explain to you what I think of Cielo. I think you're going to like what I have to say. If you follow the channel, you know the format of my videos already. We'll see what Cielo do, how they do it, and their potential addressable market. We'll look at the management team and the very latest news, including that short seller report. We'll see if there's any analysts covering Cielo and do some technical analysis. And we'll look at the financials before I give you my conclusion on Cielo. Before we get into the video, it takes a lot of time to research companies like this, so if you find any value in this content, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 150 likes, help me make that happen. Subscribe to the channel if you're new and hit the bell notification so you don't miss any new content like this, and it's 100% free and a great way to show your support for the channel. What do you think of Cielo? Have you invested? And what price target do you have? I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get into it. Cielo Waste Solutions is a renewable fuel company headquartered in Alberta, Canada, that has the exclusive global right to a patented technology that uses thermal catalytic depolymerization, or TDC. Cielo's technology converts multiple different waste feedstocks such as organic waste, municipal solid waste, agriculture waste, tires, wood waste, along with other types of plastics, and transforms them into high-grade renewable fuels using their environmentally friendly, economically sustainable technology, which is patented in both Canada and the US. All around the world at the moment, garbage has become a major problem, with very little solutions being put forward over several decades. However, Cielo's patented technology offers a global solution to a global problem. Over the next 5 years, Cielo plans to build 40 waste to renewable fuel facilities that will divert annually about 3.9 million tonnes of waste from going into landfill by converting it into 1.3 billion litres of renewable diesel fuel. Current landfill practices are outdated, and on average over a global scale, landfill methane emissions contribute to between 10 and 20% of methane in the atmosphere. Cielo provides solutions for responsible waste management whilst also providing value-added opportunities. At the moment, over 2 billion tonnes of global waste are generated each year, and this is projected to grow to over 3.4 billion tonnes by 2050. Approximately 37% of this is disposed of in landfill. Demand for diesel in Canada alone is over 17 billion litres annually, and the global waste to energy market is expected to grow to over 44 billion by 2024. The company currently operates from its facility in Alberta, but Cielo recently signed memorandums of understanding for joint ventures for a build out of up to 9 facilities, which we can see listed here, of which the JV partners are responsible for 100% of the financing, and we can see 9 JV facilities equal to about $31 million. And then upon completion, Cielo will be entitled to receive 50.1% of profits, and the JV partners will be entitled to 49.9%. This estimate is with only one plant per facility, 9 facilities equaling 126 million per year. These are huge numbers considering what revenues are at the moment. We can see here the demand for biodiesel in Canada that is increasing each year. And we can see that Cielo's renewable diesel is far more economically valuable than traditional biodiesel. Although their production cost is slightly higher, their average feedstock cost is far less, and therefore the total cost is less than half the cost of traditional biodiesel. Think about this logically. When a company wants to dispose of waste, they must pay a fee. Then the waste usually goes to landfill. However, Cielo take that waste and turn it into renewable diesel, which in turn makes profit. This is a win-win scenario for Cielo from both the economical and environmental perspective. Now, Cielo is very much an early growth stage company and therefore have no revenue to speak of, as we'll see when we look at the financials in a few minutes. However, we can see here from the 2021 operational timeline that Cielo will begin to see revenue at their Aldersyde facility later this year. So if the company's projections are correct, this is the perfect time to be getting into this stock. And we'll see from this that they have planned expansion later this year with plans for several more facilities next year. It's worth noting here that there are currently no major renewable diesel producers in Canada that can sell into the Canadian market. All biodiesel is imported. So if Cielo can attract Canadian buyers to buy Canadian, then they will pretty much have the entire market to themselves for now. And generally speaking, if prices are fairly similar, individuals and companies do prefer to buy local rather than importing. So let's take a look at the management team at Cielo. The team is led by President and CEO Don Allen. Don has more than 30 years of executive leadership experience, including experience in debt and equity capital markets, strategy and planning, risk management, and investor relations. Mr. Allen has an extensive background in business development, engineering, marketing, and project development. In interviews with Don Allen, he has said that his original background was in mechanical engineering, but his career for pretty much the last 35 years has been taking over failing companies and bringing them up to international standards. Now, the board of directors has changed a lot in the last couple of months, such as with the recent appointments of Jack Ryan in May, who is a seasoned, experienced executive with extensive experience in real estate, finance, franchise businesses, and green technology, and managing director of Ramco. Then in April, Cielo announced the appointment of former cabinet minister Peter MacKay, Jasdeep Dhaliwal, and Stephanie Lee, who will assume the newly created position of Vice President of Global Development. Peter MacKay, in his role as director, will be providing strategic advice and invaluable guidance on government and public services, industry practice, infrastructure and economic development. Mr. MacKay will be representing the company as a catalyst for Cielo's growth. He served in the Parliament of Canada for over 18 years as a Minister of Parliament and held high-profile positions in the Cabinet, including Minister of Justice, Attorney General, Minister of National Defence and Foreign Affairs. Peter MacKay brings not only a wealth of experience but is also an extremely well-connected individual whose connections will surely provide benefits for Cielo going forward. Between the management team and the board of directors, there's too many for me to go into detail in this video. So be sure to check out their website for a more detailed look at the whole team. Now let's look at the most recent press releases and news regarding Cielo. Cielo is pleased to announce that it has entered into an agreement to purchase land on approximately 60 acres in Edmonton. A greenfield site, the land was developed in 2015 for approximately $21 million in the Alberta Industrial Heartland, Canada's largest hydrocarbon processing region. The site was built by a global construction and fabrication company and has many advantages for Cielo, such as access to global markets through the two largest rail lines in Canada and pipelines to deliver fuel directly to our off-field clients. The land, with its amenities, is expected to accelerate the build-out of the proposed facility and shorten the timeframe of production considerably. So let's look at what they paid for the land and how they finance what they've got for their money. So they purchased the land for 13 million Canadian dollars, 1 million to be paid by way of 2 refundable deposits, and the balance should be funded by way of a loan. The loan will mature after 2 years and is subject to simple interest rates of 6% per year. And Cielo will also issue 12 million non-refundable, non-transferable bonus warrants to FCF exercisable for a period of 36 months at a price of $1 Canadian per share. At the moment, the current share price is far below this at around 75 cents. The value of the land combined with the time saving compared to new construction is substantially more beneficial to the company in the opinion of management. The loan is secured by the assets of the company, including charges against the land and facilities of their current plant at Aldersyde. CEO Don Allen stated his belief that Cielo will have ability to build their second 100% owned facility in a timely manner. We believe the debt financing is favourable and allows flexibility for early payout. We are pleased with the FCF's term sheet and we appreciate their belief and support in Cielo. In other news, Cielo engages Canadian investor relations firm Investor Cubed. Terms of the consulting agreement provide for compensation of $7,000 per month. In addition, Investor Cubed has been granted options to purchase 500,000 shares at a price of $125 per share. This is a firm that specialises in services for small cap and mid cap private and public companies with over 20 years of experience, and it's worth noting that the agreed price per share here is $125, which is far above the current price of 75 cents. Back in March, Cielo announced their intention to apply for uplisting to the TSX Venture Exchange, which they believe will open new doors with respect to capital markets and exposure. They now feel ready for. The next evolutionary step is to join a world-class exchange, and they expect that this will bring more awareness to the company. More recently, on May 21st, Night Market Research published a short seller report on Cielo alleging the company's joint venture partner, Renewable Energy, is actually a related party, claiming that they do not have access to the funds they claim to. So in this short report, they have claimed that the RUEI founders concurrently run Cielo investor relations in exchange for millions in Cielo equity. In their claims, they suggest that RUEI is struggling to raise finances necessary. They suggest Cielo is unlikely to hit commercialization or profitability. Cielo has struggled to desulfurize its fuel to industry standards. I thought there was a recent announcement that Cielo had actually solved this problem. I can't seem to find anything on it though. Comment down below if you have a link to this. Cielo's attempt to imply third-party validation and financial strength include the announcement of a nonsensical $14 million zero-interest unsecured loan for land. We suspect the financing was dilutive equity disguised as attractive debt. This is just simply wrong. As we discussed a moment ago, this is actually $13 million and it's secured against the current Aldersyde facility. CEO Don Allen's previous public energy companies ended poorly for shareholders, forced to delist, surrender assets, or liquidate to satisfy creditors. And further down the page, we can see that they have detailed this history as being Peace River Oil and Blue Horizon Industry. Then I found this article from 2006 on Peace River Oil. So there is some element of legitimacy to this section of the short seller report. However, Don Allen has spoken in previous interviews saying that the majority of his career has been taking beat down companies and trying to recover them. So it's not like he's taking over successful companies and driving them into the ground. Anyone who knows anything about business knows that taking a failing company and trying to turn it around is probably the hardest job out there for any CEO. Usually, despite best attempts, most fail. So I think this is an unfair assessment. For anyone who wants to take a full look at the short seller report, it's actually a good read. Check out the link in the description. Whether you agree or disagree with it, it's worth reading it anyways, just so that you're aware of what's being said. As usual with OTC companies, it's very difficult to find any analysts giving ratings or price targets for this stock. However, there is one price target of $8, which is set by Canadian money manager Robert McWhirter of Selective Asset Management. This price target was set before Cielo's $10 million loan for the new Edmonton facility. This price target is also discussed in the short seller report, so take a look at that there. Looking here at the charts, we can see that the price was trading around 7 cents until February, when it had a huge spike up to over $1.20. Then it began to decline in March. We can see on this chart just how volatile the stock has been since hitting its highest point. From being over $1 down to 50 cents, back up to $1, and continuing to move through this downward wedge, finding a level of support at this yellow line. Now on the occasions it has broke through this level of support, it has quickly bounced off the white support line. Now let's take a look at the most recent financials for the 9-month period up to the end of January. Looking at the statement of financial position, we can see that Cielo had $2 million in current assets and over $21 million in total assets, which is largely made up of property, plant and equipment amounting to $18 million. The current liabilities of $5.9 million and total liabilities of $13.8 million. This gives Cielo an asset to liability ratio of roughly 3 to 2 in favour of assets. This is a fairly healthy balance sheet, and it's an improvement on the previous year's figures. The cash figure is a bit low, but as we said already, they've raised $10 million through convertible debentures at the beginning of May. Then looking at the income statement, we can see that Cielo had practically zero revenue to date, which gives the company a net loss of $4.8 million and a total loss for the 9-month period of $5.8 million. I wouldn't base my investment opinion on the current income statement due to the fact that the company has no revenue yet And it's only when they begin to see revenue that we can determine if the business model is actually profitable as management claim it to be. As always with pre-revenue companies, we are investing on the basis of future cash flows, not current performances. So guys, that brings us to the end of the video. Before I give you my final thoughts, if you've watched all the way through, please hit that like button. It takes more time than you could imagine to research these companies and make these videos. If you're new to the channel, remember to hit that subscribe button and bell notification. I'll be running a competition next month for subscribers. Like and subscribe to take part. More details coming soon. And leave a comment down below saying that you've liked and subscribed so that I know. So what do I think? First, as we've already seen, this company had a major run up from as low as 7 cents to over $1.20. Personally, I feel that at 7 cents this stock was grossly undervalued, and at its high point was also hugely overvalued. However, the company that we have today is not the same as it was a couple of months ago. I think that the current price of 62 cents is undervalued for what the company is today, but it's not grossly undervalued. I think Cielo has lots of potential, and don't get me wrong, the stock price could potentially go up multiple times over the coming years. It all depends on the progress that they make and whether or not they achieve the targets and milestones that they have set. The second half of 21 and the first half of 22 will be a huge year for Cielo. It could be the making or breaking of this stock depending on their results. For anyone looking to invest in this company, I highly recommend that you do your own research. I also recommend to have a read through that short seller report. I'm not saying believe everything that's in the report, I'm just saying be aware of what's being said. But this is just my opinion. If anyone is thinking of buying into this stock, I encourage you to form your own opinion through your own research and do not take this video in any way as financial advice. Thanks for watching the video. What are your thoughts on the future of Cielo and what are your price targets? Leave a comment down below and I'll catch you in the next one.